All right, guys, time to hit the road. I've got my bags packed. I'm gonna get everything loaded up into the car here. And I'm out for the rest of the week. I'm gonna be trading, but once again, I'm gonna be trading with my traveling trading station. All right, get this closed up. Bye, June. Bye, girl. Bye-bye. Love you. I'll see you at the end of the week. You're gonna be a good girl? Be a good girl for Daddy. I'll see you at the end of the week. Another wet and dreary day. Heading down the driveway here on my way out. I'm gonna be in the car for a few hours, so I'm gonna get settled in. All right, so made my way up the back roads to the highway, and now I'm settling in here. I'll be on this road for a while. So we're getting ready to start a new week, Monday morning, and I'm already thinking about what am I gonna do this week, because last week for me was obviously a pretty choppy week. Even though I finished well into the green, I got myself off to a difficult start. I lost money on, I think it was Monday, Wednesday, and Thursday, and then I made $13,000 on Friday. So I ended up getting myself out of the hole, but I never like to start the week in the red. So what you should do, anytime you have a little bit of a slump, what any trader should do is go back and review your metrics. Review your trades and try to figure out what was I doing right, what was I doing wrong. And so that's what I did. I went back and I looked at my trades from actually the last couple weeks. And what I noticed is that since my kind of slump or slow period began, I had seen a sharp decrease in my accuracy. So a couple of things I noticed. Number one, my accuracy went down from about 74%, which was really high, to as low as 40% during the 4 days where I was really just totally not on my game. And my profit-loss ratio decreased a little bit as well, so my average winners were much smaller, and my average losses were bigger, which is not surprising because I wasn't really getting any good winning trades. If I include Friday, then my profit-loss ratio is actually not bad because I had a $12,000 single trade winner, and that brings up all my averages for sure. But looking through my metrics, I kind of have noticed a couple of things. And actually, you know what? Before I get into those, I'm going to pull over here and get some gas because even though I've got a decent amount, I like being able to fill up where I know there's going to be diesel, because it's such a pain in the butt to drive around looking for a diesel station when you need to get diesel and when you're really low. So let's see. I'm gonna have to go fill up with all the big trucks, I think. Oh no, actually, looks like there's a diesel fill up down here. All right, you're coming with me. So one of my friends was like, Ross, diesel is more expensive than gas. Why did you buy a diesel? And I'm like, dude, these cars take premium gas. Diesel is almost always cheaper than premium, number one. And number two, diesel engines almost always last longer than gas engines. It's a win-win. All right, ready to get back on the highway. There we go. So, one of the things I was thinking about is if my accuracy is lower, then what I really need to focus on for the next few days is trying to just take A quality setups. Now, one of the things that's interesting is I haven't taken a trade in my IRA account in like a week and a half. And remember, my IRA account right now has only $10,500 in it or something like that. I can only take 3 trades per week because I'm below the PDT level, And so really every trade has to count. And my kind of rule of thumb is that with that account, I'm only trading stocks between $1.50 and $4 because I want to be able to buy as many shares as I can. Even a $4 stock, I can really only buy like 2,400 shares or something like that. I can't take big size. So, trading that price range, and then also only trading a stock that I feel like 90% confident in that it's going to go up at least 15, 20, really more like 20 to 30 cents. I don't want to take any trades unless I can get at least 20 to 30 cents. 15 cents isn't even really worth it. Because I don't want to blow one of my 3 trades of the week on some little 10, 15 cent scalp. I want to have each trade be like $1,000 winner. So the fact that I didn't see a single trade in the last week and a half that was a good enough setup that I was willing to take it in my IRA, I think that's an indicator of the market that we're in. And obviously it didn't stop me from taking trades in my main account and losing $10,000 and then having to make it all back. Making it back was the, I guess, the fun part, but digging myself a hole and then having to get myself out of it. So this week I sort of have a couple observations, 2 really. Number 1, in January I was being very aggressive. So what I would do is I would buy a stock. I might buy 8,000 shares or even 10,000 shares of a stock, and I'd be up 30 cents, $3,000, and instead of sell it, I would add another 5,000 shares. So now I'd be holding 15,000 shares and I would still be green, but because I bought more, now my average cost is higher. And so that's okay as long as it keeps going. But then here in February, what's happened is a lot of those have turned around, and then I have to stop out with 15,000 shares. And when you press the sell button with 15,000 shares, unless there's a 15,000 buyer sitting right there on the bid, you're going to get slippage, and you're probably going to get filled 5, 7, maybe even 10 cents lower. And with 15,000 shares, that's $1,500. So, that plus a lot of these stocks turning around so quickly, it costs me a lot. So my feeling right now is that if I have that instinct to add, I should really refrain from doing that until we see a stock that's really going crazy. Now, having said that, on Friday, I took a trade on, I think it was INPX. I think that was a symbol. It was on our watch list at 357, pre-market on Friday. And the bell rang and it immediately spiked up to $4. And so even though I was chasing it, I clearly saw, look, this thing just moved 40, 50 cents. I'm going to get in, and I bought it at 405. So I chased it a little bit. Got in at 405. It squeezed up to 485. It then pulled back, and then it squeezed over $5. It hit a high of like 529 or 530 on Friday. So that was a really big range, and that was a stock where once I saw the potential, I decided to be more aggressive. So when I got in it at 405 and it popped up to 485, I was like, okay, well, now I'm up so much on this trade that I can actually afford to be a little bit more aggressive and to add to my position, because it's obviously showing the ability to move very quickly, and it was already up like 40% on the day. In contrast, if I get into a stock and it, let's say, pops up at the breakout point, the first 5-minute candle to make a new high, or the first 1-minute candle to make a new high, if it only pops up 15 cents, it's not going to make as much sense for me to add there, because I'm going to add shares. I'm not really that green on the name. And so I think in those cases, I should just not add. I should just hold my core position, or maybe even sell half. I don't know, but I shouldn't add. At least until we see more stocks doing what that stock did on Friday, just really going 30, 40, 50%. One of the things I've talked about a million times is the fact that for me, my big turning point, my discovery, was realizing that every single day, there are stocks that move 20 to 30%, which is crazy. 20 to 30%. And if you can capture even just a quarter of that move, your account can be growing 2% to 3%, even 5% per day. Now, when you invest in mutual funds, you're lucky if you get 10% per year. So if your account is growing 5% per day, that's obviously incredible. What's even more incredible is that we have these little periods where we're seeing stocks move not just 20 to 30% in a day, but 50 to 100%, sometimes even 200 or 300% in a day. And on those days, if you can capture 20 or 30% of those big moves, you're absolutely crushing it. And those are the days that that we love. Those are the home runs. But I have to remember that I really built my career on base hits, not on home runs. So as nice as it is to have a $30,000 day or a $40,000 day, the reality is those don't come along very often. And if I spend all my time trying to hit those big winners, I'm going to miss out on a lot of base hits. I'm going to give up a lot of base hits because I didn't keep the profit when I had it. So as we get ready to start the new week, I'm lucky that I've gotten myself out of the hole. I'm basically right now about break even on the month. I'm up like $800. So, all right, I get to press the restart button and try this again. We're gonna start on the, I don't know, what is it, the 8th day? Well, tomorrow's gonna be the 12th, so whatever. We're on the 8th day of February, and I'm just going to start building up my account. Try to get February back into good shape. Try to get myself into the driver's seat. And if I can get myself up to $15,000, $20,000 on the month, that would be great. I'm not going to try to have another $100,000 month here in February. That doesn't seem like it'll be realistic. But at the same time, the tides can change very quickly, as we saw from January. I did $117,000 in January, and then February I was down $12,000 at my lowest point. So it's like, the momentum can shift very quickly, and just as it turned off, it can turn right back on. So I'm excited to see what Monday has in store for us, and when I get into my hotel, I'm going to get everything set up, get my travel layout all situated, and I'll show you guys what it looks like. I don't know yet what kind of desk space I'll have. I don't know if I'll have, fingers crossed that I have good Wi-Fi, but we'll get settled in and make it happen. All right, so I've got a bit more time here in the car. Rainy drive, winter in New England. Rain, snow, ice, gray days. I feel like I haven't seen the sun since Santa Barbara, but you know what? I'm gonna be back in California soon. I'm gonna be back in a couple weeks, so I'll enjoy New England and try to appreciate the changing of the seasons here. Anyways, we'll get back to it first thing Monday morning, trading, and hopefully we're gonna find some awesome setups, and I'll be able to hit my $1,000 daily goal first thing on Monday morning.
Continue on to Atlantic Avenue.
You got it, girl. All right, almost here, coming into Boston. This guy's in the middle of traffic, backing up. Look at this jabroni, he's in the middle of traffic with his backup lights on. What is he doing? No, bro, you're not cutting in. Oh my God. We got a fender bender. So many cars. Hi, how are you? Yes, checking in.
Do you need help with the bags, everything?
Sure, yeah, if you want. There's some bags in the back. Take good care of her. She's my number one girl. Don't tell my wife I said that. Bam, top floor. There we go. Boom, boom. Not bad. I'll trade over there. I'll sleep over there. Look out the window over here. All right, it's exactly 6:30. Let's see how fast I can set up my traveling trading station. Okay, so what do we have in here? We've got 2 computers, 2 external monitors, and a bunch of plugs. We're gonna make it happen. This thing, I don't need. Getting rid of that. Got 1 monitor. There's my other laptop. And there's another monitor. Boom. All right, couple plugs. And time. 8 minutes, not bad. I'm set up, I'm connected to the internet, I'm ready to trade. Now, I've just gotta wait for the bell to ring. I've got about 14 hours, but I'm ready to go. All right, so hopefully tomorrow is an awesome day, and I'm gonna see you guys bright and early so we can start the week with some great trades. If you're still watching, you must have really enjoyed that video. So why not subscribe and get email alerts anytime I upload new content? Remember, when you subscribe, you become a member of the Warrior Trading family.